The wait is over for millions of Canadian seniors as February payments for Old Age Security (OAS) and the Canada Pension Plan (CPP) have officially been released for eligible recipients. These combined benefits could reach up to $2,000 this month, providing vital financial support during these challenging economic times. If you're approaching retirement age or are already receiving these benefits, you'll want to pay close attention to the important updates and changes that have taken effect this February. The Canadian government has implemented several adjustments to these programs that could directly impact your monthly income. Whether you're wondering if you qualify for the maximum payment, curious about recent increases due to inflation adjustments, or simply trying to understand how these benefits work together to provide retirement security. This comprehensive guide will walk you through everything you need to know about the February OAS and CPP payments. With rising costs affecting everything from groceries to housing, these pension benefits have become more crucial than ever for maintaining financial independence and quality of life during retirement years. Let's dive into the details of these programs, explore who qualifies for the maximum benefits, and uncover strategies to ensure you're receiving every dollar you're entitled to. Understanding OAS and CPP, the foundation of Canadian retirement income. The Old Age Security and Canada Pension Plan represent the two primary pillars of Canada's retirement income system, working in tandem to provide financial stability for seniors across the country. While they may seem similar at first glance, these programs have distinct differences in how they function, who qualifies, and how benefits are calculated. OAS is a universal program funded through general tax revenues, providing a basic level of retirement income to seniors regardless of their work history. In contrast, CPP is a contributory program based on your earnings and contributions throughout your working years. Understanding the fundamental differences between these programs is essential for maximizing your benefits and planning effectively for retirement. The Old Age Security Program dates back to 1952 and has evolved significantly over the decades to better serve Canada's aging population. As one of the largest pension programs in Canada, OAS provides monthly payments to seniors aged 65 and older who meet certain residency requirements. Unlike CPP, OAS is not based on your employment history, but rather on how long you've lived in Canada after turning 18. To receive the full OAS pension, you must have resided in Canada for at least 40 years after your 18th birthday. Those with fewer years of residency may still qualify for a partial pension calculated at 1/40th of the full pension amount for each complete year of residency. Established in 1966, the Canada Pension Plan operates differently from OAS, as it is directly tied to your contributions during your working years. CPP requires both employees and employers to contribute, with self-employed individuals responsible for both portions. These contributions are invested by the CPP Investment Board to ensure long-term sustainability. Your CPP retirement pension is calculated based on how much and for how long you contributed to the plan, as well as the age at which you choose to start receiving benefits. While the standard age to begin receiving CPP is 65, you can opt to start as early as 60, with a reduction in benefits, or as late as 70, with an increase in benefits. Together, these programs form the backbone of retirement income for most Canadians, with additional support potentially coming from workplace pensions, personal savings, and other government benefits. February 2025 payment updates. What's changed? The February 2025 OAS and CPP payments incorporate several significant updates that directly affect benefit amounts for millions of Canadian seniors. Most notably, both programs have seen adjustments based on the Consumer Price Index (CPI), ensuring that benefits keep pace with inflation. For OAS, the basic pension amount has increased to $713.34 per month, a quarterly adjustment that helps seniors maintain their purchasing power in the face of rising costs, representing an approximate 2.3% increase compared to the same period last year. The CPP has similarly undergone its annual adjustment, with the maximum monthly retirement benefit for new recipients starting at age 65 now reaching $1,486.67. This represents a 2.5% increase from the previous year's maximum, helping to offset the impact of inflation on retirees' budgets. It's important to note that these maximum amounts apply to new recipients starting benefits in 2025 who have contributed the maximum amount for the required number of years. Existing recipients may see different increases based on when they began receiving their benefits and their specific contribution history. Beyond these basic increases, the February payments also reflect enhanced benefits for low-income seniors through the Guaranteed Income Supplement (GIS), which works alongside OAS to provide additional support for those who need it most. The maximum GIS amount has increased to $1,065.47 for single seniors with no other income besides OAS. For couples where both receive the full OAS pension, the maximum GIS amount is now $641.35 per person. These GIS increases are particularly significant as they target the most vulnerable seniors who rely heavily on government support for their daily needs. Another important change is the continued phase-in of enhancements to CPP that began in 2019. These enhancements are gradually increasing the replacement rate of pre-retirement earnings from 25% to 33.33% for those who contribute to the enhanced program. While the full impact of these changes will be felt by future retirees who have contributed throughout their careers, current recipients are already seeing modest increases. For seniors who delayed starting their CPP benefits beyond age 65, the February payments also reflect a permanent increase of 0.7% for each month of delay, up to a maximum of 42% of benefits are started at age 70. Conversely, those who began taking CPP early, between ages 60 and 65, have their benefits permanently reduced by 0.6% per month before age 65, up to a maximum reduction of 36%. Who qualifies for the maximum $2,200 payment? Receiving the maximum combined OAS and CPP payment of approximately $2,200 is a goal many Canadian seniors aspire to, but qualifying requires meeting specific criteria for both programs. For CPP, the maximum payment of $1,486.67 depends primarily on your contribution history and the age at which you begin receiving benefits. To achieve the maximum amount, you must have contributed to CPP at or above the year's maximum pensionable earnings, YMP, for at least 39 of your 47 contributory years between the ages of 18 and 65. The YMP for 2025 is set at $68,500, meaning you would need to have earned at least this amount in each of those 39 years and made the corresponding contributions. Additionally, you must begin taking CPP at age 65 to receive the standard maximum amount. Starting earlier reduces your benefit by 0.6% per month, while delaying increases it by 0.7% per month up to age 70. For OAS, the maximum payment of $713.34 is primarily based on your residency in Canada. To receive the full amount, you must have resided in Canada for at least 40 years after turning 18. Those with fewer years may receive a partial pension calculated at 1/40th of the full amount for each complete year of residency. However, OAS is subject to a recovery tax, often called the clawback, which begins to reduce benefits when your individual net income exceeds $9,995 for the 2025 tax year, and completely eliminates the OAS benefit when income reaches approximately $148,000. Combining these requirements, the profile of someone who would receive the maximum combined payment of about $2,200 typically includes a senior who is at least 65 years old, has lived in Canada for 40 or more years after age 18, has contributed to CPP at the maximum level for at least 39 years, and has an annual income below the OAS clawback threshold. Additionally, if this person qualifies for any amount of GIS, which requires a relatively low income, the total benefit could exceed the $2,200 figure. In reality, only about 6% of CPP recipients receive the maximum amount, and even fewer also qualify for the full OAS without incurring the clawback, meaning most seniors receive a combination of partial benefits, resulting in a lower monthly payment. Recent developments affecting OAS and CPP. The Canadian retirement benefit landscape has undergone several significant changes in recent years, with further modifications implemented in early 2025 that could affect your February payments. One notable change to OAS was the permanent 10% increase for seniors aged 75 and older that took effect in July 2022. This increase, still in place for February 2025, provides an additional $71.33 per month for eligible seniors, bringing their total OAS payment to $784.67, and recognizes the increased financial challenges faced by older seniors. If you're approaching your 75th birthday, you can look forward to this automatic increase in your monthly payment. The OAS program has also seen changes to its automatic enrollment system. Since 2023, Service Canada has expanded automatic enrollment to include more eligible seniors, reducing the need for manual applications. However, not everyone is automatically enrolled, particularly those with complex residency histories or inconsistent tax filing. If you're nearing 65 and haven't received notification about automatic enrollment, it's advisable to proactively apply for OAS to ensure you receive the benefits you're entitled to. On the CPP side, enhancements that began in 2019 continue to gradually increase both contribution rates and benefit amounts for 2025. The contribution rate has risen to 5.95% for both employees and employers, resulting in a combined rate of 11.9%, up from 5.7% in 2023. Self-employed individuals now contribute the same combined rate of 11.9% on eligible earnings. While these increased contributions might be felt in workers' paychecks, they translate to higher potential benefits in retirement, with CPP eventually replacing 33.33% of pre-retirement earnings instead of the previous 25%. Another significant change affecting CPP benefits is the increase in the YMP to $68,500 for 2025, up from $66,667. Additionally, the post-retirement benefit PRB, which allows seniors to continue contributing to CPP while receiving benefits, thereby increasing future payments, has been enhanced to reflect the overall CPP improvements. The government has also implemented improved disability protections under CPP, further solidifying the program's role in supporting Canadians throughout their retirement. This updated overview of the February OAS and CPP payments provides you with the essential information needed to understand your benefits, the qualification criteria, and recent changes that could affect your financial planning. Whether you're new to these programs or a long-time recipient, staying informed is key to maximizing your retirement income and ensuring financial security during your golden years.